Hey folks, I just wanted to make a quick video as the market is kind of getting in a more positive state and the backdrop is improving. I just wanted to go over just some of the basics of setup dynamics. A lot of folks, especially newer traders or those who don't have a lot of experience, sometimes they struggle just developing a basic watch list. A watch list is one of the basic elements that a lot of traders use as the basis of which trades they're going to take. And sometimes it can feel overwhelming. There's thousands of stocks out there. Which criteria do you filter by, and how do you know which ones to kind of kick out of your watch list and which ones to keep? Which ones are going to give you the highest probability of success? That's something that's often a struggle for a lot of traders just because they don't have a lot of experience doing it. So to kind of remove some of the feelings of being overwhelmed by the process, if we just take a step back, look at the basic fundamentals of what a good setup looks like, go through the process of how do I go through a list of stocks and determine which ones I should be trading or avoiding. It'll at least get you, 80% of the way there. There's always going to be nuances and a little bit of extra layers that get added onto that to give you that final, 10 or 20%. But the process I'm about to explain will get you 80 or 90% of the way there. And you want to keep the process simple. You want to have the core elements, like the Pareto principle, where the 20% of your actions are going to give you 80% of the outputs. You want to focus on those core 20% of variables that are going to give you the most bang for your buck, and that's what I'm about to explain here. And I'm certainly not the first one to come up with these ideas or to talk about them. I've borrowed heavily from Christian Kulamagi and Stockby and other traders who have influenced a whole generation of traders, especially in recent decades. And the idea is simple. Stockby talks about what he calls an anticipation setup, or what he talks about the first day of a breakout. And these are if you pause the video and you go to these links here on Stockby's blogspot.com website, you'll find these articles here. But the fundamental concept is you want to have something that has a linear leg up, basically like an uptrend and then a sideways consolidation. And whether I'm looking at this picture or this picture, it's an uptrend and a sideways consolidation. And the difference between these two images is this image at the top is showing what a stock looks like before a breakout, and this image on the bottom shows the first day of an expansion breakout move. As it says here, this is what it looks like on the day of the breakout. And if you look at these kind of criteria that are outlined, this is just the verbal representation of what he's showing in these pictures here. The first leg up should be smooth and not volatile, so you like this first leg up. This one happens to be a gap above this base. This one is a nice orderly uptrend. And you want a consolidation that's 3 to 10 days of consolidation or pullback, which is a series of narrow range days in pullback or consolidation. It's orderly with no 4% breakdowns during the pullback, low volume, low volatility. And Kristen Kulamagi talks about the same exact stuff. You want a leg up, you want a sideways consolidation or base, and you want that sideways consolidation to start compressing, contracting. The volatility should start to contract. There shouldn't be a lot of violent swing in action. It should be nice, tight price action. And you can see as this setup here develops from left to right, it starts wide and loose, and then it starts getting tighter and tighter as it goes right. Same thing with here. You have an up leg, you have a leg down, a rally attempt, leg down, and as it goes from high to low of these pivots, it starts getting tighter and tighter and compressing in this really tight range here. And then this is the first day that this thing breaks out of this range. Whereas in this situation, this stock hasn't yet broken above that range. And you'll notice one of the key elements here is it's not up, several days in a row. And if you look through any of Stockby's videos, he actually has a lot of videos where he goes through the process of filtering out the stocks that he thinks are a good setup for a 4% breakout or for an anticipation setup. And you'll see he kicks out lots of stocks. as soon as he looks at the chart and like in his mind it doesn't meet these basic criteria, it's an immediate like, I don't need to focus on you because it's a low odds situation. So all that we're doing when we're going through these possible stocks, let's say you've had a basic set of filters and you have hundreds of stocks in it. How do I know which ones to focus on and which ones to ignore? And that's kind of the impetus behind all of these criteria here. And these aren't really difficult criteria. The basics of it, you have a leg up that's orderly. You have a consolidation that's, Stockbee says 3 to 10 days. Kulimagi says 2 weeks to 2 months, which, that's, 2 to 8 weeks. So, but it's a similar concept. Like you want to have this kind of tight, orderly consolidation, and you want to have the range compressing and contracting. The volatility is contracting during the process of this sideways movement. It's the same exact concept of a Minervini volatility contraction pattern, a VCP. Again, like none of these concepts are like new. They've been around for decades, spoken about by many different traders over the years. The market doesn't change, only the players change. The tickers change, but these concepts of supply and demand, they are one of the fundamental underpinnings of trading many different styles, and in particular this style of trading expansion breakouts. So that's just the concept here. If you're confused about this, maybe you can read these articles more in depth, or you can watch some of Stockbee's videos on 4% breakouts. He has quite a few of them. But I'm just going to show you real quickly, if I go through, this is the exact screen that I use every single day when I'm trading. And I've gone over this before, but I have some basic criteria in here for relative strength. So I want the top 10% for different time frames. This is 2 weeks, a month, 3 months, 6 months. So this just captures all stocks that have a top 10% relative strength rank along those 4 time frames. You can use different time frames. You can use 1 week. You can use 1 year. You can add different variations of this. That isn't really the point. The point is to isolate the stocks with the strongest relative strength out of the entire market of stocks. I also add a few additional elements of liquidity. So I want some kind of base amount of volume per day, a base amount of daily dollar volume, which is basically the average volume times the price. This is probably on the lower end. I'd rather have something have 50 or 100 million dollar volume, but this is kind of the minimum threshold where it's like I don't want to look at it if it's below that because it's just too thin and probably not worth my time. And then as far as like when I'm looking during the day, as soon as the market opens, I'm looking for stocks that are like positive for the day. If the stock's down for the day, I don't really want to see it because I want to have stocks that are actively in motion and potentially giving me the first day of a breakout. And if it's negative, that means it's not meeting that criteria. So this automatically kicks out anything that's negative for the day. You have an average daily range, which this is just a simple criteria, just showing what is the average volatility of the stock, shown as a percentage. I also want stocks that are in an uptrend, and just a simple criteria is I just want to make sure the stock has the 10-period moving average above its 20. And there's times where that'll dip below it a little bit, so I kind of have this little bit of flexibility threshold to where if the 10 drops below the 20 just slightly, it'll still pick it up. So it's like as long as the 10 is above the 20, within the last 5 bars, then it'll come through this screen. If the stock starts living below its 20 and the 10 starts living below the 20, then I don't want to see it at that point. I want to wait for it to kind of reestablish itself. I want to have a stock that's within recent highs. 30%, within 30% of the recent 1 month and 3 months highs. That's a pretty liberal amount. And what that does is it kind of captures some of the more volatile names. So if a stock has an ADR of, let's say it's 10 or 15%, you can imagine that it being 30% off its highs is not very far. Whereas, something that has a 2% volatility and it's 30% off its highs, that's a pretty significant emotional event for that stock. So this is just kind of a wide net sort of approach to capture those stocks that I tend to trade stocks that are a little bit more on the volatile side, 5% ADR or higher. But this is just a way to kind of throw out anything that's just like way off of its highs. And sure, that'll miss a few things, but I'm not really interested in a stock that's 40, 50 or plus percent off of its highs. And then the other thing, in addition to having this criteria here where it's up 2% for the day, I also have it where it's hitting a 4-bar high on the hourly. Basically, like on the day that I'm running the scan intraday, I just want to make sure that it's breaking out, above at least the recent couple of bars of hourly bars. And that's just my kind of threshold of making sure that the stock isn't just kind of dead cat bouncing off of some sell off. It's just a way for me to kind of filter out some of the crap. So with those basic criteria in mind, if I run this scan, out of the entire market of stocks, there's less than 70 that are meeting this criteria, where they're meeting all of these filter criteria. And what I do is I just sort them by the volume buzz, because I want to see which ones have the strongest volume coming into them. And what I could do is I could just move these to a separate watch list. That way I can start kind of kicking out the ones that aren't really interesting, and I can leave a pile of stocks that I want to see. So if we go back to the slides and we refresh, this is the kind of situation we're looking for. If it's up several days in a row, it needs to get kicked out. Like if it's not day one of a swing move, it needs to be kicked out of this list. So just based on that simple thought, this is up multiple days in a row. This, down here, like this is day one of a swing move. This is day one of a swing move. This is, day 5 of a swing move. That's not what we're looking for. Like if you're looking at it at this point trying to buy it, then you're way, way late. You should have been down here or down here. Kick it out. This is up 3 days in a row. This is day 1 of the swing move. This is day 3. This is day 1. Like I don't really trade gaps just because it's not really my style. But if you trade gaps, this would be day 1 of a potential swing move. This is day 1 of a gap. It's gapping over all this resistance area here. The volume is coming in super heavy. So like this would be one. Obviously now it's 1 p.m. Eastern time. Obviously I would have wanted to get this earlier in the day. Like if I was trading this, I would be looking at it the first 5 minutes, half hour of the session to see if I wanted to trade this gap. At this point in time, whether you get it here or not, that depends on your risk parameters. But just suffice to say, if I was running this scan at let's say 9:45, 15 minutes into the session, and this is what it looked like, as it was coming out of this, emerging out of this range, this would be day 1. That's something that I would keep. This is day 3. You throw it out. This is day 4. This is day 5 actually. Like day 1 of the swing move is down here. Like when it's emerging out of this range, this is day 1. This is day 5. You don't buy it here, you buy it down here. This is day 2. This would be day 1 down here. If you bought this in the morning yesterday, that would be day 1 of a swing move. And that's what you're trying to find. Things that are emerging out of this sideways range on the first day of that emergence. That's the day that you're targeting it. Anything after that is too late. You've missed the boat. That's why you have to catch these things. You either have to look at the setup and anticipate them. So imagine you were looking at this thing here, and you think, okay, that's starting to tighten in its range. It has a leg up. It's starting to tighten in its range. These last few days have been a little tight. You can tell by these white bars here that the volatility has been contracting. So maybe that you would throw that on the watch list a couple days ago. And then when it has this day here, you're not buying it at the end of the day, you're buying it in the beginning of the day when it's first emerging from this zone here. For those of you that can't trade in the morning or early in the session, that's something you're gonna have to deal with. You might have to have stops in place that if it breaks out of this zone here, then it's going to trigger you into the order. and you're going to pick up that position. There's pros and cons to that. You could get poked into a lot of things and then end up getting stopped out. Sometimes it's good to be able to have some volume confirmation or things like that in order to add to it. My preference is I like to get it on the morning of. I usually trade the first hour of the session. So most of my positions I'm going to be picking up in that first hour, and then if it follows through for that day, then obviously that's a good sign. But trying to get it here the next day, like, you're too late. Like, getting it up here, don't do that. That's a good way to go broke. This is the third day up. Again, like, this day here is the first day of this emerging from this range. Like, that's the day you would pick it up, not 2 days later. And if there's anything that I can repeat and emphasize over and over again, is like, do not buy when the stock is up several days in a row. And that's one of the core criteria here. And there's a reason that StockB has that criteria in this list, because if you just have that simple mindset of never buy a stock that's up several days in a row, then you've already put yourself in a very good starting point of making it as a swing trader. This is the time you want to be selling a piece off. 3 to 5 days later is when you want to be like handing part of that position off to the dumbasses and the newbies that are just now buying it here. That's not where you want to be buying it. You want to be buying it down here as it's emerging from this range. But right now, it's like, obviously I can kick this off the list because it's several days up in a row. This is up 3 days in a row, kick it out. And I'm just going to go quickly here. This would be day one. This is day two. Like, you don't want to get it now. You wanted to get it on this first day. And obviously this first day, if you look at the hourly, was pretty sloppy. But, let's say you got in at the open and it slopped you out and then it started to reverse for the rest of the day. You can have a plan to re-enter those sort of situations. But this is day one. Don't get it on day two. This would be day one. So you see this sideways range. This is the first day that it's emerging out of this consolidation. If you look on an hourly, you can kind of draw this. This was a little bit sloppy, but you can see there's kind of this sideways range that was built over a period of hours, and then it's breaking above that range. So this would be day one. So like, if I was looking at this morning, and I see this breaking out of this range, that's when I would buy this, especially since there was volume confirmation. This is up 3 days in a row. Don't buy it here. This is day one down here. You can see the difference. Like, day one, like, this is the bar that you're buying right here, not when it's already up 3 days in a row. This is day one of a breakout. Again, you have this sideways range. This is the first bar that it's breaking out of this range. This is the bar that you want to be getting in on. So this is day one of this breakout move. This is already up several days in a row. This had a consolidation, and this is day one. So, I mean, this would be a legitimate swing trading entry, but obviously the better entry was down here when it was closer to the 10 and the 20 period moving averages. And you can see here it had this sideways kind of 5 days of consolidation, and then it broke out. Like, this would be day one of that swing move. And then it consolidated again, and this is day one. Again, it was up several days in a row. You're not buying it up here. You're waiting for a consolidation, and then this is day one, and you would buy it here as day one. And that doesn't mean this process is going to be perfect. You can see here, you can imagine this sideways consolidation, it tried to break out, and then it reverses and it would stop you out. And that's okay. They're not all going to work out. But if you take day one here and ride it up, if you take day one here and then like you get stopped out, that's fine. You take day one here, you ride it up, day one here, ride it up, day one here, ride it up. You're going to have losers in the mix here, and that's totally fine. Don't let the losers deter you from finding the winners. But the core feature here is you want to get in on day one, day one, day one, day one, day one. Here, I mean, you could have taken this morning when it broke out. That's a valid trade, but these that are stretched from the moving averages, I kind of hesitate. Those are a little bit more failure prone. I'd rather have it closer to the 10 and the 20. It gives you a little bit more of a platform for this thing to launch off of. Lunar, this was a bit sloppy. This is one that I actually took, and you can see like it tried to break out, it reversed. It didn't actually undercut my stop. It almost did, and then it's kind of recovering. So this is one that I actually am in right now, but kind of the same concept. I got it after, they had this little sideways area here. A little bit of sloppiness, but as long as the market kind of maintains its footing, I think this thing will be just fine. And it has kind of a super high ADR, so this is a good looking stock for me. As far as buying it today, that's kind of iffy. It depends on your strategy. The more extended this thing gets from the moving averages, the riskier it becomes. So I would kind of watch that. But if you got slopped out on this first initial breakout, there's a chance to re-enter before it kind of takes off again. Again, this is up 3 days in a row. If you were catching it down here as it was first emerging, that's okay, but now is not okay. It's up 4 days in a row, and you kind of get the process. You get the process here. Like, I'm going to quickly kick these out just because these are going to show themselves to be not what you're looking for. This is a gap up above this range here, so this would be day one, gap above this range and the 50-period moving average. So again, like, this is something I would probably want to catch in the morning. It's actually pulling back to that same level. Ivanhoff said that later entries aren't always worse entries, and this is a good example of that. Sometimes a later entry will get you basically the same spot as if you had gotten in earlier. There's a lot of trade-offs when it comes to trading later, but later entries are not always worse entries. But this would be a valid day one. This date is day one here. This is a continuation of day one. You want to get it as it's emerging here, not here. I mean, if you trade kind of O'Neill style, this is kind of breaking out of a cup and handle base. The volume isn't super high, but this would be kind of where traditional O'Neill buying would be. This is where I'd rather buy the first day as it's emerging from this swing. This is already up a few days, up a few days, up a few days. I actually bought this as it emerged out of the this range here. And you can see there's kind of this pivot low. There's like a low here and then a higher low. And you can kind of see this pivot that it makes. Once it breaks out of this range, it doesn't have to break out of this exact trend line here. I know people are so particular about, oh, I got to wait for the trend line to break. It's like, if this pivot is breaking, I'm getting in, especially if the volume is coming in heavy. And this thing is following through nicely. But I wouldn't buy it here. Like, don't buy it here. This is a really dumb place to buy it. Same thing here. I mean, this little stutter step day, I mean, you could call that a pause. You really want like three or more days of sideways range. I mean, this could be a legitimate setup, and this be a day one. These are just a little bit trickier. Again, like, there are some nuances. This is up 1, 2, 3 days, but these first 2 days are kind of narrow ranged up days. That's kind of debatable whether you should get in then or not, but some people might consider this the first day of the swing. Others might want more of a sideways range. I know Stockby would kick that one out. This is up several days in a row, up several days in a row. And you can see, like, I can quickly go through this list, and you'll see how quickly these names start to get thinned out. This was a pause day for 1 day. Again, these 1 day pauses can work, but they're a little bit more failure prone. It's better to have a couple of days of pause and then it emerging from that. But sometimes if you have these little short 1 day flags like this can be a viable place to kind of catch a breakout, that's for sure. But again, it just depends on your style and your risk tolerance and things like that. So like this could be considered a day one. This is a day one. It had these couple of narrow range days, and this is the first day of expansion, but this overall setup in the context of it is kind of crappy. I'd rather have up sloping 10 and 20s, and it's just pulling back into it. This thing cut through all of its moving averages, and now it's just dead cat bouncing. So I mean, that's not something I would really want to play with. It's already up a few days. It's already up a few days. Again, I'm just going to kick these out real quick. Again, there's a lot of discretion and nuance here. Some people might consider this 2 days of sideways, even though this was an up day. And maybe this is the first day as it's emerging out of this little sideways shelf here. That's a little debatable. I certainly wouldn't take this. I want it to be more tight and constructive, but there's again a lot of nuance here. This is a sideways range here, and this, it's trying to emerge out of the sideways range, so that could be a valid setup. Same thing with here. This is the first day as it's emerging out of this sideways range. It's already up a few days. It's already up. Okay, I'm just going to quickly go through these, and I'll just pause only if I feel like something's worth explaining. This is the first day emerging, so Peloton is emerging out of this sideways range here. And you can see there's a low here, and even though it like slightly undercuts it, it's like it didn't like totally shit the bed on this, and it's kind of holding along this 20 period moving average. And you can see the highs are kind of getting compressed. So when it breaks out of this range here, like this bar that's breaking out, this is going to be where you get in. And I'm actually in this stock right now. But again, like the reason I got into this stock is because of the exact things I'm telling you. There's a sideways range. This is the first breakout bar where it's emerging out of that range. And yeah, so I think it's a good setup. It's already up. It's already up. I'm just going to go real quick through these. And you can see how quickly I'm getting rid of these. So that looks like a valid setup here. This is looking like it's trying to emerge and break out of this, but the volume's pretty shitty, so I'm not going to take that. But I'll leave it as a valid setup. This is debatable, this sort of sideways tight range, and this is the first sort of kind of breakout. And you can imagine if I'm drawing like kind of a flag, there's higher lows being built, and this lid here, it's kind of breaking out above this this lid. But again, the further I get down this list, the less likely I'm going to get it, just because the volume is coming in really weak. But I'll keep that there as a day one, just for example purposes. This 1 day pause, it's just like, I don't know, I don't like messing with those 1 day pauses, but it depends. Like on a really super volatile stock, I might do it. I got into this one today just based on exactly what I told you about. You have this sideways range, you have the higher lows being built, and this thing initially in the morning, it kind of it didn't hit the pivot yet. It kind of undercut, and then it rallied, and I got it here when it broke out. But again, like this is what I'm looking for. I want it to hit the pivot, and then I want it to keep following through. So I got it down here, and then it's up a decent amount since then. But this is day one, what I would consider day one after 3 days of consolidation. This is a day one swing move. This is day three. I don't want to get it there. This is, this is a little bit sloppy, but this would be a day one move. You can just see how sloppy the end, like if you look at the hourly bars, it's just really sloppy and hasn't tightened up. Like this isn't something I would necessarily trade unless the volume was coming in really heavy. Sometimes really heavy, strong volume can outweigh a sloppy pattern. But I wouldn't take a sloppy pattern unless I had really heavy volume conviction. Otherwise, I'd rather have a tight, orderly, constructive setup. But I would consider this a day one move. This is technically a day one move, but again, it's just 3 days of sell off, and there's not really any tightness. I wouldn't take this sort of setup. This is already up a couple days in a row, and it's extended from the moving averages. This is extended. I wouldn't take that. This, again, it's up several days in a row. It's not really emerging from a tight area. I would consider this area here the sideways range, and this was the first day out of it, but it's not really coming out of that. And again, if you draw these little flags on the hourly, you can kind of see where the appropriate pivot and like the breakout is here. So like if we look at this day here, like this would be the breakout, not, like the next day is just too late. Again, this was day one of the breakout here. This is day two. I'm not going to get it on day two. It's 3 days up in a row. Again, if you draw your trend lines, let's say you're like, okay, I got this range here. The breakout is the day prior. Like when it's moving above this range, that's when you get it. This is too late. Don't buy it the second day. If you miss it, you miss it. Like don't start chasing stuff. Just get better at identifying the setups quicker. And on the first day, don't chase things 3 days later and be like, oh crap, I missed the move. This would be day one. Again, if I just draw my little flags here. This isn't complicated technical analysis. So you're just drawing some basic trend lines and like, is it breaking above that? Today would be the day one of it breaking above that. But again, the volume is kind of suspect. This is day one. If I draw my little flags here, this is the first, the first bar that's breaking above this range. This is a day one kind of move. This is the third day. Again, some people might argue that these 2 days were tight enough. This is not something I would take, only if the volume was coming in super heavy, but the fact that it's way down the list, I'm not going to mess with that. This, technically broke out yesterday and kind of reversed. It reversed, but didn't close terribly, and today is just kind of following through from that. That's one of the reasons I kind of give my positions a little bit of wiggle room. Some people would be like, oh, it didn't follow through instantly, so I'm just going to cut it. I kind of have more of a mini perspective of, as long as it doesn't get wider and looser in its volatility and it doesn't violate the integrity of the setup, then I'm going to stay with it. I've found that's a much better and more sustainable approach than just chopping it. Some people like to chop it as soon as it doesn't do what you think, and that's an approach that a lot of successful traders use. It's just not my preferred approach. Oh wait, I'll kick that one out because this one's already passed its buy point. Again, this three days in a row, and this is up several days in a row. So out of 68 stocks, I'm left with 18. And this is just to show you, like, how I went from 68 stocks to 18. All I literally did was kick out the ones that were up too much for the day. So what I do is this scan gets run every morning. As soon as the market opens, I have this scan running, and I have it sorted by volume buzz, and I'm literally doing the same thing. I throw it into a watch list. I start just kicking out all the ones that are too extended, or they're not emerging from a sideways consolidation. If they're up 2 or 3 days in a row, then it's like, okay, I already missed the boat. I'm not going to chase it. And so that leaves me with this list of day one movers, and like, this is my list of stocks that I'm focusing on for the day. And you can see all of these are emerging from day one moves. And my priority is going to be probably these ones with the higher volume buzz. And then as I get further and further down the list, I start getting more and more suspicious of the sustainability of that breakout, or at least its ability to follow through. I do make some exceptions. Like if it's down on the bottom of the list here, and like the volatility is relatively high, and I can get a tight spot. You can see like AIRI, the volume wasn't super great, but it's following through nicely. It has a very high ADR. So I mean, that's one that I got, and it ended up working out just nicely. But I just wanted to make this video real quick. As the market backdrop slowly improves, I want you to have the tools in your tool belt to be able to either anticipate the setups the night before, or maybe the morning before the market opens, or after the market opens, and you're able to kind of see that volume buzz come in after the first 5, 10, 15 minutes. I want you to be able to go through that list of stocks, and whether it's 50, 75, 100 stocks, you need to be able to whittle that list down to something actionable. Maybe 20 stocks or less, and then out of that 20, you have to pick 2 or 3, maybe 5 at the most that you're going to actually put your capital towards. And that could be based on the volume buzz. It could be based on the ADR. It could be based on the sector that stock is coming from. But at least you'll have a good idea of which stocks to not trade. You want to know which stocks to avoid, which ones that you don't want to put your capital in because the odds are very low of you having a successful swing trading move. So again, to recap, setup fundamentals are going to be critical to your success as a trader. You need to know what you're looking for and be able to identify those things quickly, and also to identify what you're not looking for and to pass on those things really quickly. That way you can narrow your focus to only those situations that are going to give you the most bang for your buck. I prefer to get things as they're moving, so like that's why I have this list here of stocks that are actively moving today. Because what I do is I run the scan, and I'm actively trading breakouts on the day that they happen. I've tried to use watch lists in the past. I would have all these watch lists, and then I would have watch list of watch lists, and it just got to be a nightmare for me. Me as a busy engineering professional, that didn't work for me. It was just too much to manage, and I found it to be much more manageable when I just kind of focused my attention to those names that are breaking out on volume, and then I could just go stock by stock and evaluate. Is this emerging from a sideways range, or is this extended from that range, and I need to pass on it. And what that's allowed me to do is to instead of spending all this time building watch lists of stocks that may or may not ever break out, I'm only looking at the stocks that are actively breaking out right now. And I've been able to take my process and be able to focus for 15, 30 minutes of the day. And like I can do all of my trading in 30 minutes a day, maybe an hour at the most, just because I've been able to refine my process to such an extent where that's possible. And it's because I know exactly what I'm looking for and I know exactly what I'm not looking for. And then I just use proper risk management, position sizing, things like that. And I just put the trades on and then I manage the trades. That's all that you can do as a trader. And I feel like if you use that same approach, I think you'll be able to have some success in longevity in trading. And then the only other thing that I layer onto this process is modulating my aggressiveness either up or down based on the backdrop. So if the backdrop is conducive and the odds are in my favor, then I will take more trades, or I'll take larger size trades in these exact same setups that I'm showing you today. If the backdrop is choppy or it's negative, then I will either not take the trades, or I will take smaller sizes, or I'll wait longer in the day to where it's like maybe I don't catch it in the first 30 minutes. Maybe I wait for an hour and just see, because there's a lot of reversals and false breakouts. And what that does is helps me reduce some of those false breakouts. That way I can kind of keep my head above water and I can at least get some opportunities if they show up, but not get chopped to pieces in all the reversals and false breakouts and things like that. So I hope you found this to be helpful. If so, leave some comments. I'll try to get to your questions as I have time. But use this process, and I know that it'll work for you like it's worked for me.